Do you know the housing market forecast for the year 2023? Are you planning to purchase a house this year? If yes, then you should know the possibilities in the housing market this year to help you decide on purchasing a property. It is important to be informed and financially wise in one. Having a house of your own is such an achievement. It is pleasing knowing that you're financially capable of buying a new house. It may be for your growing family or your investment. It is an asset. However, due to some phenomenon that happened in the last few years that could possibly affect the housing market, home buyers have some questions. Will there be a price increase or a price drop? Is it the right time to buy a house? In this video, we will give you the things you need to know about the housing forecast this 2023. The housing market is known as the real estate market. It brings together a variety of participants, including homeowners who are selling their properties, renters, real estate investors who buy and sell properties exclusively for investment purposes, contractors, renovators, and real estate brokers who serve as facilitators in the process of buying or selling a property. Homeowners, sellers, purchasers, and tenants may experience disappointment in 2023 after being overwhelmed by the recent housing frenzy. Let us discuss the 5 things you need to know about the housing market forecast 2023 to help you decide whether to purchase a property or not. Number 1. Despite slower growth, prices are rising. For both present homeowners and potential purchasers, the main issue is what will happen to property prices. For the 84.2 million households who own their primary dwellings, the value of owner-occupied household real estate rose to a record high of $41.2 trillion in the second quarter, or an average of $489,185, or a 1% chance in a home's price translates into a change of more than $400 billion. The wealth connected with real estate is partly due to the nearly 10-year climb in home prices, which is expected to continue in 2022 with double-digit increases. Prices were rising because of historically low mortgage rates, which are no longer an issue. Because of this, home price growth is expected to continue to decline and reach 5.4% in 2023, which is lower than the pre-pandemic average. Due to rising mortgage rates that will harm home buyers' purchasing power, the average cost of financing the typical for-sale property will be over $2,430 per month in 2023. This would represent a hike in the mortgage of approximately 28% above 2022. It was about twice what buyers typically paid in 2021. Number 2. An increase in for-sale inventory predicted. Compared to October 2022, there were 0.5% more homes available overall. The number of active listings had climbed by 33.5% compared to the previous year, excluding those in various stages of the selling process. Still, it had not yet closed, pending listings, with homes remaining on the market for nearly a week longer. Since mortgage rates are anticipated to remain high through the end of 2022 and into 2023, we anticipate sluggish market conditions to continue and inventory levels to rise gradually as home sales stall. Total inventory should rise globally by 4.0% in 2022 and 22.8% in 2023. Given the recent roller coaster ride inventory has been on, it's important to keep in mind the historical context. Inventory levels are predicted to be 15% below average by 2023. Seller confidence fell in 2022 due to rising mortgage rates and fewer favorable price growth expectations. By October, new postings were 15.9% lower than last year. Since prices are likely to climb, seller activity may increase inventory. Number 3. Continued expectation rent increase. After 13 months of double-digit increases, the rent's annual growth slowed to a single-digit rate in the late summer of 2022. Although this is the case, the cooling off does not always imply that the rental market will soon return to its pre-pandemic levels. This is considering the high inflation rate and the strong job market. The quarterly national rental vacancy rate has been circling close to the historic low territory since the second half of 2021, compared to the historical average of roughly 6%. Only 5.6% to 6% of homes available for rent are now vacant. Before 1985, the rental vacancy rate had never been this low for 5 straight quarters. The most recent figures show a slight improvement in rental vacancy to 6%. However, renters in the United States will still have challenges in the coming year because of a lack of supply and high demand, which will pressure upward rent growth. Our forecast for national rent growth for the following year is 6.3%, slightly higher than the rise in home prices and historical rent trends. In contrast to existing market trends and expectations for for-sale homes, there may be greater demand for rental properties in metropolitan areas within significant metropolises. Number 4. Decline in home sales. With 6.12 million sales of already built homes hit their highest point in the past 15 years. Due to the record low interest rates this year, more work is expected to be done until 2021. At the beginning of 2022, people were optimistic about home sales, and mortgage rates were only around 3%. But as the year went on, investors thought that the Federal Reserve would change its monetary policy to be stricter. This made mortgage rates go up. The Fed funds rate went from 0 in March to its current range of 3.75% to 4%, more quickly than during any other tightening cycle in the past 40 years, and more hikes are expected. When they reached their highest point in 2022, mortgage rates had gone up about the same amount since the beginning of that year and by more than 440 basis points since their all-time low in early 2021. Considering how far the Fed is expected to raise interest rates before stopping the tightening cycle, we think that rates will increase a little more before reaching their highest point. Even though prices have already gone down, the markets were happy to hear that they went down again. We think that in 2022, there will be 5.3 million sales of already built homes, which is 13.8% less than in 2021. Home sales are likely to keep going down because there aren't good enough buyers because home prices and mortgage rates are high. We think that sales of already built homes will drop by 14.1% more in 2023. Reaching a low of 4.5 million per year for the first time since 2012. 4.662 billion. Number 5. There will be a return to normalcy. Riley claimed that this is the year when regular, hardworking buyers will be able to rejoin the market if they have felt priced out over the last few years. First time to purchase their own house will be welcomed with their FHA loans, and sellers will be given a dose of what it feels like to not be in control of the entire transaction. Sellers could list their properties from April 2020 to March 2022, kick back, and wait for buyers to urge them to accept an offer. That era is long past. The past 2 quarters were marked by sellers who were too obstinate to accept price reductions and buyers terrified of high borrowing rates to make offers. However, the forecast is that 2023 will be a year of adjustments. Sellers will return to reality and buyers will start to understand a 5% interest rate isn't that horrible. This would open up the market for regular transactions and typical conventional loans. As you can see, based on the things we have discussed, the housing market is challenged by many factors. The fact that we have suffered from the pandemic, which resulted in inflation, these two have hurt the economy and they have affected the housing market as well. Make these forecasts as your guide if you're considering buying a house of your own, especially if you're buying for the first time. What do you think about this topic? Do you agree with me too? Share your thoughts in the comment section below. Don't forget to like, share, and subscribe. I'll see you in the next video.